Welcome. In this video, Swftcoin trend changed. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we examine the chart in detail, we can clearly observe the formation of a distinct downward trend structure throughout the past price movements. The price has remained under downward pressure for a long time beneath this descending trend line. Each time there was an attempt to rise, sellers stepped in and pushed the price down, leading to the formation of new lower lows. This descending trend line has essentially acted as a significant resistance zone for the price. As time progressed, especially in the most recent periods, it became evident that the price could no longer withstand this pressure and eventually broke above the descending trend line. The fact that the price was able to break through such a major resistance indicates a significant shift in market psychology. We can now understand that the dominance of sellers is starting to weaken and that buyers are stepping in more strongly. However, there's a notable detail here. Oftentimes, after such major trendline breakouts, the price is expected to make a pullback move, revisiting the broken trend line. This is known as a retest move. This retest serves as confirmation that the breakout is healthy and reliable. Yet, in the current chart, we haven't observed such a pullback or a proper retest move yet. It seems the price continued upward almost without hesitation after the breakout. In situations like this, we can consider two different scenarios. In the first scenario, the price continues with strong momentum after the breakout and initiates a major rally without a retest. This suggests that the market is under heavy buying pressure and that buyers are acting quickly. In the second scenario, the price moves upward for a while, but eventually pulls back to the previously broken trend line, tests it, and then resumes the upward move. At the current position, it is not yet clear whether the price will pull back to find support at the old resistance or will catch a strong upward momentum directly. However, the overall picture indicates a positive breakout. If, in the coming period, the price does pull back and find support at the broken trend line, this would be a strong signal that the trend reversal is becoming official and that much larger upward moves are on the horizon. Therefore, the most reasonable thing to do right now is to patiently monitor the price movements, observe how the price behaves in the event of a potential retest opportunity, and consider bullish actions if the price finds support. Because if the price starts using this previously oppressive trend line as support, it could signal the beginning of new highs and a larger rally. In conclusion, the long-standing descending trend line that has kept the price down has finally been broken, and a classic retest has not yet occurred. This means that in the near future, the price will either enter a strong rally directly or initiate a much more solid uptrend following a short-term pullback. But we need to look at more than just trend lines. Keep watching. When we examine the chart with great attention and detailed analysis, we can see that the current market structure presents a highly characteristic example within the framework of the basic rules of the Elliott wave theory. In particular, the completion of the first two waves shows that the process is progressing as planned, which paints a promising picture for the period ahead. Looking at the first wave, we know that this initial move often doesn't create widespread awareness in the market. That is, during this wave, most investors don't yet realize that a trend has begun, which leads to indecision in their buying and selling decisions. The first wave is generally formed with relatively low volume and is considered the start of the trend. In the current price structure, a similar scenario has occurred. The initial move caused a breakout, but did not yet gain significant upward momentum. The second wave, according to theory, is always a corrective move. At this stage, some of the investors who bought during the first wave may want to take profits, while others, skeptical of whether the rise is real, may choose to sell, causing the price to pull back. However, one of the core principles of Elliott wave theory is that the second wave should not fall below the starting point of the first wave. If this happens, the wave structure is considered invalid. At this point, it's clearly visible on the chart that although the second wave has made a deep correction, it hasn't dropped below the beginning of the first wave. This clearly shows that the Elliott structure remains valid and the bigger picture is still intact. The current stage we're at may very well be the beginning of the third wave, which is arguably the most critical phase of this structure. In technical analysis, the third wave is always described as the longest and strongest wave. This is because by now, a much larger group of investors realizes that a new trend has started. With increased interest, significant growth in trading volume, and a shift in market psychology to the positive side, price movements become much more aggressive. The magnitude of the third wave is measured using specific ratios. It is typically expected to be at least 1/618 times the length of the first wave. However, when momentum in the market is very strong, this ratio can extend up to 272. Considering the current price movements and momentum indicators, we can say that the third wave should target at least the 1618 Fibonacci extension level. If market conditions are supportive, this target can easily reach up to the 272 level. Looking at the psychological aspect, investor psychology plays a very important role in the third wave. The doubts seen in the first two waves now give way to excitement. Especially toward the middle of the third wave, the FOMO effect kicks in, and investors start rushing to take positions. This increases buying pressure and accelerates the upward movement. In such an environment, rising trading volumes and positive signals from momentum indicators will be key factors supporting the sustainability of the rally. To summarize, the price structure is currently forming a textbook Elliott wave formation. The first and second waves have formed healthily, the second wave hasn't dropped below the beginning of the first wave, and the structure remains valid. It now appears we are at the beginning of the third wave, and the minimum target for this wave is expected to be the 1618 Fibonacci extension level, with a more bullish scenario pointing toward the 272 level. Technical indicators, price movements, and market psychology are all progressing in a way that supports these expectations. From this point forward, the key elements to watch for are the price remaining above important support levels, momentum indicators showing bullish crossovers, and rising volume. If these criteria are met, it is highly likely that we will see a strong upward rally in the coming period. In Elliott wave theory, third waves are the most profitable and powerful moves, and if such an opportunity is approached with the right strategies, it can offer significant returns for investors. When we take a detailed look at the RSI indicator, we can clearly see the formation of a very notable upward trend structure. This upward trend on the RSI, which has developed in parallel with recent price movements, can be interpreted as a strong sign that the market is gaining strength and buyers are gradually becoming more dominant. At the moment, the RSI value is very close to the ascending trend line we've identified. Typically, when the RSI touches such ascending trend lines, one of two scenarios tends to occur. Either it bounces strongly upward from the trend support, or if the support line is broken, signs of weakening begin to appear. However, when we examine the current price structure and the overall market momentum, we are receiving significant signals suggesting that the RSI is likely to bounce off this trend support and initiate a new strengthening move. It's important not to overlook the critical importance of this contact with the RSI trendline. Such support tests on the RSI indicator often act as a precursor to similar movements in the actual price. If the RSI receives a strong reaction from the support line, this can lead to a parallel upward movement in the price itself. In other words, with a bounce from the RSI trend support, the price might also perform a retest of its own ascending trend line. This kind of structure shows us that the price is not just undergoing a random correction, but is actually experiencing a healthy consolidation phase within a larger upward trend. Especially considering that the RSI's current level is not close to the oversold zone, any upward reaction from here has a higher potential to be strong and lasting. Another important point to remember is that ascending trend lines on the RSI indicator like this often appear as part of longer-term bullish trends. So, if this support line holds successfully and the RSI starts to curve upward again, it could trigger not only a short-term rise, but also the beginning of a more medium-term positive price trend. In conclusion, the moment of contact with this ascending trend line on the RSI stands out as a very critical level. If the RSI manages to bounce from here, expectations for both indicator-based strength and price-based trend continuation will increase. This could create new position opportunities for investors. Therefore, closely monitoring this area is of great importance in order to catch potential new moves early. It's definitely worth keeping an eye on the RSI indicator. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.